Welcome back. You're tuned into Bazaar Morning Call. As promised, we have Deven Choksey, Managing Director at DRChoksey Finserv, who joins us on the show. Hi, Deven. Good morning. Good to see you, Ben. It's going to be a tricky market, but let's ask you about the management that just joined in transformers and rectifiers. They're promising much better times ahead. The stock has seen a good run as well, but then it pulled back a little bit from the top. What's your view, given going by what the management had to tell us?
Yeah, Nigel. Good morning. Well, I think they are in a very, very sweet spot, at this point of time. The entire segment, the power segment itself, is showing relatively, a high amount of growth. This company being in the business of servicing the customers with the transformers, generation as well as distribution power of power transformers, which is what they are basically catering to largely. They are talking about from 2,000 odd crores worth of top line to 3,500 crores of top line 12 months forward. And around 70-75% growth in the profit, both at EBITDA as well as at the net level. I believe that even though the stock may sound a little bit expensive at this point of time on the valuation, but that given the fact that the amount of growth that they're talking about on a sizably large order book in tech that they're talking about, I believe that 2 years forward, probably the stock is not looking as expensive as it would look at on trailing 12-month basis. So it would be clearly an opportunity as I see it from the investment perspective for this particular stock.
Okay, got that. Hi, Deven. Good morning. Good to have you on. I just want to get your sense on IGL, Indraprastha Gas. Because yesterday, when that news came in of Delhi NCR looking to go, move to full EV for their three-wheeler fleet, the stock was falling in a rising market. Market otherwise was doing pretty okay. Your sense?
Good morning, Survi. Not completely sure as to how do you play this particular space. Largely because of the fact that every day there are too many moving parts which are changing. Someday you have the lower input cost, which are lower gas price. That could possibly help you. Another day, on the market side, you have some challenges happening. So maybe at this point of time, not fully having a clear idea about how exactly the kind of a business will pan out. Though on a volume front, they will continue to grow steadily as I see it, on an overall basis.
All right, Deven, the big tailwind from an India macro as well as market perspective is that Brent crude prices have cooled off. That justifies RBI's cuts and gives them further firepower to go ahead and cut rates as well. And there are a couple of plays that come to mind. The paint companies, input costs will be linked out there. Maybe some of these aviation companies as well, but out there you can only play interglobe. How do you approach this? Falling crude prices, a benefit for OMCs, paints, as well as, say, aviation companies. What's your pick?
Yes, Nigel, it's a blessings in disguise, as I would call it as. The kind of money that you will be saving, both on the foreign exchange side, as well as the company's input cost side, is going to be certainly very significant if the crude oil prices play out the way it has been projected. Certainly anything below $60 to a barrel, is definitely a good sign for the country as a whole in that sense. And as you rightly hinted, probably RBI will have more comfort now in accelerating the rate cut cycle because of the given trajectory of the lower crude oil prices. In my viewpoint, probably industry would find extremely good amount of breather, both on the input cost side, on margin side as well. And so it should ultimately end up attracting a large amount of investment to the country. So let's keep our fingers crossed. If that stays lower, probably it is going to be a helpful agenda for most of the industries, including paints, which you mentioned.
Generally the feedback seems to be in the run-up to the MPC, there have been lots of discussions, regular discussions, etc., which bankers, etc., get invited. They seem to be fully focused on growth and really, backing all kinds of measures which will revive growth. And hopefully we see that later today. And of course, at the margin, oil prices, they may be volatile and they may go back up again. But the point is, at this point, in the last 4 days, we've seen a 20% drop, which is the single largest variable for macros here in India. Deven, so just to take that one point ahead, what's the best way to play a dovish RBI in that sense? What names, if you will?
So fortunately, I think the country as a whole is spending money on infrastructure. Industry is spending money on building the capex projects, etc. And demand for credit is increasingly higher because of even the consumer spending. So from a perspective of, I think, safeguarding your portfolio, probably in a falling interest rate market, I would think that some of the large banks, some of the large NBFCs would be relatively a better choice in this kind of situation. On one side, they have a potential to lend more, and on the other side, I think the means are protected, or probably I think showing better signs of growth as well. So in my viewpoint, I think there is probably the time to look into some of the large companies, large banks, and the NBFCs, where probably I think you can keep your portfolio intact, and maybe in falling market, given an opportunity, one could buy them into the portfolio.
Okay. Got that. On pharma, Deven, now pharma is the next thing. Everybody's holding their breath, right? Because he's saying I'll do tariffs on pharma. It's a matter of just knowing that number. What would the strategy be? What would you advise on how to play this through?
Suppose if I have to assume that I think it's a pressure tactics, I think then it is absolutely fine, because I think on that pressure tactics, I think they have to win this game. Largely the fact that I think the healthcare bill in USA could possibly skyrocket if these particular tariffs are going to be imposed on pharma. Given the fact that insurance companies will resist, I think, this kind of move from the government, let's see how exactly it plays out. In my viewpoint, I think it appears to be as a pressure tactic at this point of time. The last thing that they could do is probably raise, I think, tariffs on pharma. That's what my take would be. But in this kind of volatile situation, taking one view of particular at a time, I think is difficult. So we'll wait and see how exactly it plays out.
He's done everything he said he would, Deven. And maybe that will be the last thing he will do. But it looks like he's going to do it.
Yeah.
And let's just hope. But the thing is, even with this, the targets is China. It's just that because that is the factory of the world as far as most active pharmaceutical ingredients are concerned. We are slightly higher formulation, manufacturing, etc. And of course, some API as well.